This segment of Delmarva Life is brought to you by Sussex County Federal Credit Union.
Oh, it can be so tempting. You see that pair of shoes, those earrings, or that great outfit.
Or maybe it's a shiny set of tools, or maybe a car accessory. You gotta have it. So you pull out the credit card, don't give it a second thought.
And that's how it starts. Later down the road, you find yourself drowning in debt. In fact, a consumer finance survey found each household owes an average of $7,117.
Well, today we break down the biggest misconceptions when it comes to our debt.
A credit card for food, one for air miles, another for points. Using plastic when you don't have cash can add up to some real problems. First off, it sounds tempting. Buy some clothes, sign up for a store credit card, and save money. But if you don't pay it off at the end of each month, you'll pay interest on the entire amount you initially charged, often at a higher rate than a typical credit card. One of the biggest debt don'ts, just because you get married doesn't mean you have to take on your spouse's debt. Although many couples do want to take on the burden together, the responsibility falls on the person who incurred the debt before marriage. Beware of refinancing if it means you'll be responsible for their debt. Also be aware you will be responsible for any debt incurred after you wed, even if your name is not on the account.
Now, it's not just credit cards people turn to when they're short on cash. Many people also take advantage of payday loans.
But these too can be monitored closely by each of the 3 major credit bureaus, particularly if you default on the loan. Joining us today to tell us more are Debbie Jewell, Business Development Manager, and Cherie Coleman, Vice President of Marketing, both with Sussex County Federal Credit Union. Thanks for joining us this afternoon, ladies. Cherie, let's start with you. Sure. Why do you think these loans, these payday loans, are so common?
Well, I think it has to do with the fact that life doesn't always go as planned, especially when it comes to finances. I mean, we've all been there, whether it's due to job loss, medical situation, or sometimes even a death in the family. You know, we're in need of money in a quick situation. And when those situations happen, there tends to be a trickle-down effect. We are either stressed for money, we're making improper decisions, we don't have the money right at hand, so we make a quick choice. And payday lenders sometimes have easy options. They're quick. You know, it's no credit score required. Just come in and we'll give you what you need till your next payday. The problem is you get into a cycle, and sometimes it's hard to break that cycle.
So, Deb, these payday loans can really have a negative effect.
They can. They can. While they can help someone immediately get the cash that they need, it actually can create a cycle of debt that you can't break away from easily. They have exorbitant interest rates, which can actually range up to 400 to 800%. Yeah, it's unbelievable. There are high fees, there's subpar lender reliability. In addition, it's a small loan size that you can borrow with a short-term repayment cycle. Sometimes you have to repay these loans within 14 days. It creates future dependency, and it has a negative impact possibly on your credit rating.
Wow. So, Cherie, what do you tell people who get caught in this cycle, in this payday loan cycle?
Well, we tell them that we definitely have solutions for them, and we also try to take a proactive approach. And try to inform them about products that we have that can help them save money up front. We try to help them explain the fact that, you know, you can have direct deposit, you can try to, you know, educate yourself, put yourself on a budget so that you're ready for these emergency expenses when they come up, and so that you're not making unwise choices at the last minute.
So there are ways, if I get into this whole payday loan cycle, I can't actually get out of it?
There are ways that you can break away from the payday loan cycle. First, identify your income and expenses. See where you can trim your budget a little bit. Ask your employer if you can take on some additional hours at work, or maybe even consider a second job just to get through this rough point so you can repay your payday lenders. Third, also contact your landlord, contact your utilities company, explain your situation, explain where you are right now, because most people and companies would rather get paid than not. Maybe they can change your due date. They can set you up on a payment plan. And also consider maybe an Encore loan that has an extended loan repayment term, 1 to 6 months, versus having to pay back your payday loan within 14 days.
Now, Sherry, the business owners sometimes have employees ask them for an advance in their paycheck, and I know it's hard to turn them down. Is there some sort of option, some alternative?
Well, it is with the credit union. What we do is Deb actually goes on site to a lot of employers and talks to their employees about how not to get in the situation in the first place. But if they do get into that situation, we have programs that can help. That are non-traditional ways of helping them out. Instead of going to the payday lender, they're alternatives for building up their direct deposit, building up savings, and checking products where you don't have to qualify in traditional ways. So Deb will go right on site, explain that to the employer and their employees. She also can do seminars on how to use credit wisely and how to build budgets.
So there is a way that we can establish a plan
Absolutely.
to get out of the cycle.
Absolutely. With our Encore checking program that we put in place, it's a stepping stone program to help people break the payday cycle and get away from payday loans and money orders. So checking loan, again, traditionally, if you haven't been able to get a checking account in the past, now you have access to one. You can receive a Visa debit card, you can have direct deposit go to this account and enjoy online account access. In addition, there's an Encore loan solution which is available, which provides someone with a short-term loan. They can repay it within 1 to 6 months instead of the 14-day cycle, pay off their payday lenders, and we also report to the credit bureaus on their payment history, so we're helping them not only break the payday loan cycle, but reestablish their credit. And whether you have negative credit or no credit, you can receive this loan.
You guys are like magic.
Well, it's an important point that Deb makes where, you know, traditionally when you're in one of those short-term fixes and you didn't make the most wise choice, you only have a limited time to pay back, and it's usually due on your next payday. So your next payday check, it takes all of your check to pay that back, and then you have to get another one for your regular living expenses. Whereas with the Encore loan at the credit union, you have up to 6 months to fix that temporary situation that you're in. So it gives you a little bit of breathing room and time to really correct the situation that you're in.
More options. Deb, Sherry, thank you so much for
You're
this
welcome.
information.
Thank you.
Great
Have a great
stuff.
week.
All right. And for more tips from Sussex County Federal Credit Union on how you can manage your money wisely, go to delmarvalife.com and click on the show tab. Well, while we're talking money, we're sure you could find a few ways to spend an extra $250. We'll have your chance to win before 5 p.m.
And next, it's time for our final clue in the Where is Brian Guessing game. Brian, what do you got for us?
Well, Jimmy and Lisa, what I have for you is a second clue, and it's also your final clue. So here goes clue number 2. The town was once considered the wealthiest town in its state. I'll reveal where I am when we come back. Stay with us. You're watching Delmarva Life.